Hello and welcome to the Bullish Bears YouTube channel. I'm Jeremy and today I'd like to thank you for supporting our channel, and I really appreciate all the likes and subscribes that we've been getting from our audience, and our growth has been steady. We really appreciate your support for this channel, and we love being able to provide some little tips and tricks for trading the stock market back to our members as well as our subscribers and of course everyone who appreciates our channel. We appreciate you. Getting right into it, I'm going to show you guys how to identify liquidity zones really quickly and efficiently on a 2-hour chart, and then break it down into smaller time frames to give you some really quick trade ideas just by glancing at the chart. The whole point of identifying these liquidity zones is to know where to put your price targets for trading long and short, as well as being able to identify areas of strong resistance and or support. It works very similarly to supply and demand zones, but not quite in the same way. And the reason why is that this is just a much more simple way to identify areas of interest in a chart, really. So let's get right into it. Looking at a 2-hour chart on QQQ here, we can see that there's lots of big wicks on some of these bigger candles, and that's what we're looking for. So effectively, if you want to know where the liquidity zones are, you kind of have to pay attention to what the chart's telling you as well. Here we can see there was some resistance here. That is an important area, and right in the pre-market here, we are actually gearing right into this zone right here. So identifying that is important, knowing there's going to be some sellers here. Essentially, when you have a candle, you're seeing people chase the ask in a bullish candle, and effectively all the limit orders were right in the top of this, where there was enough liquidity to run that momentum pretty much out of gas and stop it right there. That candle closed right there, and you'll notice the next couple candles didn't quite make it out of that area. Even the wick in the pre-market here didn't quite leave that area. So it is an important area, knowing that that is easy resistance. If you wanted to carry this into today's price action, looking at the previous day's price action is also important. The previous high is going to give you a smaller zone typically, and I usually will identify these on a 30-minute chart, but we're going to put it right here on a 2-hour chart because it's probably going to be about the same, being honest. And the next area we are going to look at is this area up here. This is not the all-time high for QQQ, but you can definitely tell there were some sellers here. We don't have to go for every long wick. We don't have to go for the longest wicks. The idea is to identify where the key resistance was. And you can see the candle before this didn't quite blast out of that zone. I'm just identifying this wick here. This was from the opening. This wick here is just a big doji. It's not going to really matter, although you will still see some areas with dojis that are important anyway. This one was not. This is like such a long wick. If you wanted to shade this area, you weren't going to get any real targets out of that. The next part of this is drilling down into a tighter time frame and figuring out where your short-term price targets are likely to be. And there's one key to this. Identifying areas between zones is almost as important as it is to identify the zones themselves. So you can see there's some support here from the previous day's high. You can go and identify this wick here as the next zone, but if we're going to remain bullish, we're likely to go through this zone and keep trending on up to this next zone here. If we reject this zone, well, we can certainly identify that the support is here. And if you really want, you can identify these areas here as a support if this fails to hold at this level. So trading from one to the other is important, but identifying about the halfway point is also kind of important. I'll throw just a horizontal line in there typically so it doesn't blind me having a bunch of shaded area in my chart. And take a note of where the midpoint is between these two zones. Oftentimes you will find that price will tend to accumulate in those areas about halfway between zones. You can see in the pre-market here through all this accumulation that that was a halfway point between the support and the resistance areas. So kind of take note of them. You don't necessarily have to draw those as a shaded area. Ideally, I just put a pivot on there so it's a little less blinding on my chart. Drilling down into the time frames we're going to trade, which is typically a 5-minute chart for most people when you're day trading. options on SPY and QQQ. And this is just to give an example anyway. So the way you're going to be trading is looking for breaches of the midpoint. So if you were to trade in a pre-market, say you were after futures on the jobs data that came out this morning, you're going to be looking for the breach of that midpoint and take the long position on that break, ride it on through here, and you could stay long probably A to B in this whole zone, A being the bottom, B being the top. That's the idea, just identifying your price targets and making your trades appropriately. Most people are closing right here, and all that is finding where the limit orders are. Those limit orders do move around, but for the most part, they tend to stay true to previous price history. If you didn't have a previous price history to note these zones, you can also do one little trick that I love to do, where I just identify primary and secondary price movements. So if you were to look here, you could see that this move from yesterday was pretty much repeated right above its resistance. You can see that this was a primary, this was a secondary. So taking a note of this move here from yesterday's price action also gives us this price target that we're hitting right now. Same thing. It goes a little bit beyond our zone, so we know that we're likely to kind of poke out of this zone a little bit. So if you wanted a little assurance on where that price was going to go, that's where it would be. Another little trick is knowing about where half of that measured move is. And if you look at this consolidation, the halfway point is right here. It's at the base of our zone. Easy to identify. You can kind of figure these things out really quickly and make very fast decisions on your trading. And that's the whole point. Pretty much it in a nutshell. It's really that simple. Sometimes you'll find that you have trouble identifying zones correctly. You'll have a couple issues with finding price targets that run true to those zones. It will take some time to get used to identifying just the specific areas that you want to trade to in the chart by knowing where all the candles kind of line up. If you were to look at this area here that I marked, for instance, you would see that price resisted it pretty well. All the candles to the left of that kind of lined up right there. Same with this zone up here. All the candles to the left kind of lined up right there. In this little area here, that was yesterday's high. All the other candles kind of lined up right there. If you wanted to identify lower zones, you certainly can. You can probably pick off this low here and stretch it over, and the candles would kind of line up with that. You can see, just using my cursor, that this candle lines up with this candle. Pretty simple stuff. That's all there really is to it. That's all for today. Thanks again for joining us, and thanks again for your support of our channel. Have a great day.